Hi, guys. Okay, so today we're going to talk about bankruptcies, in particular, Chapter 7 and Chapter 13. Now, if you haven't filed bankruptcy and you're thinking about filing, this is definitely the video for you. And if you filed bankruptcy but you really didn't know what you were getting into, this definitely is the video for you. So let's get into this video. I have a few nuggets of information that I want to drop, and then we're going to talk about, of course, disputing bankruptcy. Guys, if you are new here, I thank you for gracing us with your presence. If you find anything in this video helpful, please share this video. It's free, good information with someone who needs it. Now, if you're already in the family, hey y'all, thank you so much for watching. Please like, share, comment, do all those things that helps YouTube push this video. So let's get into this. In today's video, I'm going to be answering some real specific questions that you're going to want to have answers to before you file bankruptcy, or if you've already filed bankruptcy and you're kind of questioning it, or you just need to know this information. So let's get into this, guys. Now, let me show you this. And of course, you guys know I made a presentation. This is what I do. Okay, so now, we're talking Chapter 7 bankruptcy here, guys. So debt collectors cannot legally attempt to collect a debt once you file bankruptcy or once you file Chapter 7 bankruptcy. An automatic stay goes immediately into effect. Now, when you get that automatic stay, that's usually, well, I don't want to get ahead of myself. Okay. What the automatic stay does, it prohibits all collection activity, including phone calls, texts, emails, debt collection, filing, or continuing lawsuits. So a lot of people, I've had people who've had like big lawsuits, like hundreds of thousands of dollars for like debt. And they'll just go file Chapter 7 and be like, you can't get me, that kind of thing. So bank levies, wage garnishments, sending collection letters, reporting new negative information to credit bureaus. This is going to be a biggie as it relates to disputing, and this is going to be like a dispute reason that I use a lot because it is a violation of Fair Credit Reporting Act laws as it relates to disputes. So, and here is just like some key laws about the automatic stay and what that is. So the automatic stay is going to protect you. You're going to feel safe. You're going to, you'll feel that immediate release, especially if you're stressed behind this. And most people who file bankruptcy are stressed. Now, once your Chapter 7 is discharged by the court, you are no longer legally obligated to pay those debts, including the charged off ones. Now, that leads me to a question that I had earlier. Someone wanted to know if an account is already charged off, right, before you file bankruptcy or Chapter 7, can they still come after you for that debt? No, not as long as you include that in the bankruptcy. So here are all the debts that you can list in your Chapter 7 and be protected from. Credit cards, personal loans, medical bills, auto loans, if the car was repossessed and the balance is charged off. Okay, now get that. Now, if you have an open loan, you can't just throw that in there. Unless it is a personal loan. Some people suffer for personal loans. All right, store credit lines, collections related to those charge-offs. So if there's like an AT&T collection on your credit report, you cannot add that into your Chapter 7 charged off account. But however, since Verizon does report on your credit report as it relates to a charged off account, you can include them in if they're sent to collections, and that shows up on your credit report. That makes sense, okay? So basically any collection that has gone third party that was previously charged off, like if Capital One sells the account to a collection agency or hires them to collect that thing. Okay, so when a charge off cannot be discharged, okay, certain debts, even if charged off, cannot be eliminated in Chapter 7. This includes student loans unless undue hardship is proven. which is very difficult. Child support or alimony, recent tax debts, court fines or criminal restitution, debts incurred through fraud or false pretenses, debts from willful or malicious injury. Okay. So, legal backing, discharge of eligible debts is covered under this law. Okay. Post discharge creditors attempting to collect can violate the discharge injunction under BAM, that law. So, there is a loophole or like a back door that creditors can go through to still try to get you to pay. A lot of times it's unsuccessful, but for the most part, that Chapter 7 is going to cover you. It does most people. Okay, so important. This is important now because this is credit. This credit report accuracy after discharge bankruptcy. Example, y'all know I love to use Capital One for some reason. All right, so if you have a Capital One account that has been charged off and bam, you look on your credit report, you can see that they're saying you owe them $5,000, that's the balance, and $5,000 past due amount, things like that. But once you file your Chapter 7 bankruptcy after it's discharged, the balance on any charged off accounts that are included in your bankruptcy on your credit report have to be at a balance of zero. It cannot have a balance of the $5,000 or whatever it is that you owe. That is misreporting, that is fraudulent misrepresentation, that is willful noncompliance, and so on. So the account has to be completely zeroed out. The account status is going to say negative or derogative, but the balance should say zero and the past due amount should say zero. Now, in the creditor comments or remarks, you'll see that it's going to say discharged in bankruptcy or discharged in Chapter 7 or included in bankruptcy. So that is proper reporting per Fair Credit Reporting Act Law, Metro 2, of how a charged off debt is going to report after. So let's talk about Chapter 13. Now, this is the most commonly filed bankruptcy that I see. Now, what happens when you file Chapter 13 bankruptcy? As soon as you file a Chapter 13 case, the court issues an automatic stay under that law, just like Chapter 7. This automatic stay immediately stops collections, calls, letters, emails, text messages, lawsuits, judgments, foreclosures proceedings, repossessions of vehicles. That's why a lot of people file. Wage garnishments, that's another one. Utility disconnects, IRS debt collection with some exceptions. Okay, so this is why more people file. All right, so Chapter 13, repayment plan, not liquidation. So you have Chapter 7, which is more of a liquidation plan. Chapter 13 is a repayment plan. Unlike Chapter 7, Chapter 13 is a 3 to 5 year repayment plan. You keep your property, including your home and vehicles. You pay a portion of your debts back through a court-approved monthly plan. At the end of the time, most remaining unsecured debts are discharged, right? Can a debt collector try to collect during a Chapter 13 filing? No, they cannot, because then there's that automatic stay that we talked about. Once you file, the automatic stay legally bars them from contacting you, suing you, reporting collection accounts to the credit bureaus, trying to enforce a judgment. Violating this stay is a federal offense and may result in sanctions under that law. Okay? And here's the other question that you get a lot, because we have, lots of people wanting to buy homes, a lot of first-time home buyers, still, and they're, I don't know about you guys, wherever you are, but here in North Carolina, they are building up homes like crazy. Every neighborhood, literally, is like full of homes everywhere. They're like, you can stand like this and touch the houses. It's crazy. Okay, so everyone wants to buy a home. And with bankruptcy, it can be a little tricky. It's not always easy, which is why most people want the bankruptcy removed off of their credit report. Now, when can you buy a home after bankruptcy? Now, Chapter 7, the liquidation bankruptcy, FHA loan, 2 years, VA loan, 2 years, USDA loan 3 years, conventional loan 4 years, non-QM portfolio 1 to 2 years or less with large down payment. Note, the countdown starts from your discharge date, not the filing date. A lot of people don't realize that, and then they're kind of bummed because you were in filed state for like 15 months, and anyways. So there's that with that. Now, I have seen programs where if you file Chapter 13 and you've built your credit, up within a year or so, and your scores are good, and you don't have like any other ongoing negativity going there, like late pays and things like that. I do know companies that will approve you for a home loan, of course, at a slightly higher interest rate, but you'd be able to get the loan and get into, your new home. Hence, that's again the interest rates being so high, which is why people want the bankruptcy removed off their credit report. Now, Chapter 13 Bankruptcy Repayment Plan, FHA, VA, USDA, 1 year into the plan with on-time payments and court approval. Now, a lot of people are doing this, and interest rate high, yeah, ouch, kind of high. Are you going to have to really search for a good lender? Yeah, it's not the easiest thing, but people are doing it all the time. Conventional loan, 2 years after discharge or 4 years after dismissal. Now, back to FHA, VA, and USDA. Now, just in case you're wondering, your bankruptcy does not have to be discharged yet in order for you to be able to buy within that year. Just so you know. Now, non-QM case by case sometimes during the plan. Now, you must show 12 months of consistent trustee payments and get court permission to incur new debt. Okay, with that, Chapter 13. All right, so credit considerations. Your credit score and debt to income ratio must meet the lender's requirements. FHA as low as 580, 3.5% down, or 500 to 579, 10% down. Ooh. VA, no minimum score, but most lenders look for 620 or better, some 640. Conventional, usually 620 to 640 plus, non-QM flexible, but higher interest rates, okay? Why do credit card companies close accounts during bankruptcy? Okay, have you, if you filed bankruptcy already, then you know what I'm talking about. If you have not filed bankruptcy, you're going to want to know this before it shocks you. Okay, you filed bankruptcy today at 3 p.m., sometimes by 11 at night, or at the very least the next morning. Especially if you have Credit Karma or whatever credit monitoring service you're using, you're going to start to see the bankruptcy show up on your report in 24 hours, sometimes less than 24 hours. And also, you'll see your credit cards start getting shut down, and you're going to be, some people are just like shocked. They're like, I can't believe they closed my credit card. I didn't even include this in the bankruptcy. But here's why. Once you file bankruptcy, the court issues an automatic stay with that law, freezing all collection activity and alerting creditors immediately. They don't even wait till 5 o'clock, but creditors, including credit card companies, are notified through the bankruptcy court system. Even if you don't list a card in your filing, the credit bureaus update your file, and credit card companies often review your credit file profile regularly. Most banks have internal policies that automatically close or suspend as soon as they detect bankruptcy filing to mitigate risk. Okay, so they're going to shut you down. So just don't be afraid of that. Just know that it's going to happen before you file if you haven't filed. Can I keep any credit cards after filing? Chapter 7, almost all credit cards will be closed, even if you reaffirm a debt rare with unsecured cards. The issuer can still close it. Now, with Chapter 13, some creditors might allow you to keep cards during the plan, but only with court permission, and usually only if you reaffirm or exclude them. Now, which is difficult and discouraged. Yeah, I put that there, and that's my opinion. That's only my opinion. All right. What to do after a discharge? Start rebuilding your credit with secured credit cards. I don't really like secured credit cards, which is why I fight so hard to get bankruptcy removed. But generally, that's the easiest way to start rebuilding your credit. But what I would say is if you have a personal bank that you like working with, I would rather do a secured loan with my bank to get me started and then kind of work my way up with my bank relationship than to go out here and get like certain secured cards and stuff. Because let me show you guys. Like, I'll come back to that. Like, you can apply for like the Capital One Platinum MasterCard. Now, this card is unsecured, okay? May approve you after 6+ months. Okay. I did this digging around so that I could give you this information so that you won't go out here and get the secured credit cards, because I don't like them. Like, I've had clients who had secured credit cards making payments on time, $300, and after 3 years, they're still at that same $300. They haven't, the credit card bank or whatever hasn't released them from the secured standings and put them at unsecured. I just hate that. But anyways, so you also have Mission Lane, the Mission Lane Visa, designed for after bankruptcy applicants. Okay, so you're going to get a slightly higher interest rate with these cards because of your bankruptcy, but they're unsecured. Okay, then you have the Avant card, no security deposit, mid credit range needed. That's like the mid 600s. Okay. Credit One Bank, even though this is not my favorite bank, it's still better than a secured card. This is something that I would get and use it for 6 months and then just leave it, balance zero while I moved on to bigger and better cards. Credit One Platinum Visa often approves within 6 months after you've discharged. Upgrade Visa with credit line with no deposit reports as a loan. Okay, I like that. Allo, invite only. Oh yeah, they're invite only. But if you need it, I'll look you up. Just let me know. Okay, hit me up in the comments or text me. Pre-qualified offers after 6 to 12 months. Okay, so that's something you can do other than just getting a secured card. Now, I'm almost done here, guys. Timeline to get unsecured credit cards after bankruptcy. So after Chapter 7, 3 to 12 months after discharge. Chapter 13, 12 to 18 months after filing, not discharge. So you can get in there, sooner. Usually after you've discharged, it's probably going to take like a year, maybe sometimes more. Some people take 5 years. So, yeah. All right. So tips to improve your credit, of course, pay all your bills on time, do the things that I just told you to do, about rebuilding, get loans from your banks, things like that. Trusted people who can attest to your income. A lot of people will use their income with their banks or relationships and trust with their banks, things like that. So guys, I hope this video helped you. If you do have a bankruptcy that you need to dispute, let me know, guys. If you have any questions on disputing, if you're looking up discrepancies on your bankruptcy, you just cannot figure out how to get a foothold on it, or how to construct your dispute letter, things of that nature, guys, let me know. Shoot me a text message, send me an email, send me a hootie hoo or whatever. I'm always happy to help and give advice and strategy. Feel free to go to my website and sign up for a mentorship or like the quick questions with Tina, something like that. If you have questions, happy to help you. If this video helped you, please feel free to like, share, subscribe, all the things. As always, thank you. We will talk soon. Bye. Guys, I just wanted to stop for 1 second, just to ask you guys to like this video, subscribe to this video if you're not subscribed, do a comment. I don't care if you put a heart in the comments. Help this video go around to the masses, guys. I'm growing. I literally just realized the other day, I literally just realized a couple of weeks ago that I'm over 10,000 subscribers. And for me, that is like really huge, guys. So I want to say thank you. Thank you for helping me grow. So back to the video.